What's up, everybody? This is Trader Bryce. I'm doing this intro because I'm doing something I did a while back, a couple months ago, maybe a month or two ago. I actually just uploaded a webinar for SteadyTrade Team and Small Cap Rockets, and I wanted to show you guys basically what these members are getting because I'm really proud of the webinars I do. I put a lot of time and work into these. So today's webinar was about volume and how it's relative to basically watch the webinar. I pre-recorded it here and I'm putting it on YouTube to show you guys what I do every single Wednesday for SteadyTrade Team, and Small Cap Rockets also has access to this. So if you guys do want weekly access to these webinars, click the link down in the description below and enjoy this webinar in place of today's Small Cap Recap. So today's video lesson though, today's webinar is actually going to be about volume, and I guess like another breakdown on, in my opinion, volume is a relative term. I did not YOLO Tesla calls. Should I have? Are they going through earnings? Looks like it, eh? Did they just beat earnings? Man, that's like a nice little chart too. I mean, that daily chart, that consolidation is really, really nice there. This is a nice little breakout chart. Oh my God, this after hours action is scary. What am I looking at? Is that real? Are those prints real? Oh, okay. Oh yeah, that's great. 13% year over year, very nice. All right, well, if I cannot figure this out, give me a couple more minutes, but if I can't figure this out, we'll just get right into the webinar. Oh, nice, Tesla. FFIE, more drainage today, it looks like, yeah. I'm watching RYTM for a short coming up soon. Just not sure when. RYTM is a really good case, though, of how we can kind of show the relativity of volume. Because, so I got this question in Small Cap the other day, and I was like, it was basically along the lines, let me see if I can go find it. Let's see, where was it? How do you use volume to tell if there's potential for movement to the upside was the question. Any advice for exiting stocks too early? I've tried lowering my position size and still didn't see any other things that I can do. Fortunately, it sold way too fast. Journaling is your next best bet. If lowering position size doesn't do anything for you, your next best bet is journaling. You just have to show yourself that you are continuing to make that same mistake. That's really all you can do, right? Is just showing yourself that you are continuously making the same mistake day in and day out by writing it down on your journal. You know, like write it down and you're eventually going to be like, wow, why do I keep doing this? Why do I keep selling too early? But it's going to take a lot of journaling. You're going to need to go through so many examples and continue to do it because you need to realize at real time, like, okay, why am I like, this is the same mistake I've been making for X amount of months in a row. Maybe I'll try holding on a little longer. And I'm not great at it. Like, I'm not amazing. Another option is buying, setting a stop, and turning off your computer. That can help too. It's not an awful idea. You know, that has worked really well for me. The other day, I shorted my rhythm, my RYTM, and I literally just went and did other stuff. I just shut down all my trading platforms, and I went and cleaned, and I went and cooked, and then I went and took a nap. And that forced me to not even look at it, right? Like, I find for me personally, when I'm not actively staring at my screen, it's a lot easier to not care, right? It's kind of the same theory too, that so a lot of successful business owners do not actively manage their own business. And when I say successful business owners, I mean successful entrepreneurs, really. They get to a point where they no longer manage their own business. They hire management, whether it's a team or one person, but they hire someone to take care of the day-to-day operations so they can focus on the bigger picture goals, right? So they can focus on growing the company instead of actively managing the company. And it's the same idea when they're no longer looking at the day-to-day, the minute-to-minute action. They're more easily able to identify bigger picture trends and working on the bigger picture. It's the same exact theory there, right? That's what I would say. Like, if you're struggling, find a stock, find a trade that has big long-term potential, and just shut it off. Just shut off your screens. Dodger, all the webinars are uploaded. Okay, so in terms of moving stops up, I mean, that's fine, but here's the thing. You need to find something that works for you. I never move my stops up unless I add to my position or a very new meaningful low was set. I think using stops in terms of a 10-minute candlestick, I haven't read this, so I'm not sure, but you know, I think there's better ways to do it, because it just depends on the pattern or strategy you're trading, but you don't need to keep moving your stop up, because eventually what you're doing then, right, is you're just constantly changing your risk parameters, which is good because in theory you're just taking profits on the way up or ensuring that profits are taken on the way up. But that's just one way of managing risk. Like, look into other options. Go through it. Guys, I hate to break it to you, but the only way that you are going to find that consistency is by going through your own data and seeing, okay, where should I move my stop to? Where should I have done this? And then journal it and write it down. It's going to take hundreds of hours to go through every single one of your trades and do this. And that hundreds of hours is what's going to separate you. It's what's going to turn you profitable. And it's not something you need to do overnight, right? It's something that you need to say, okay, for an hour every single day, after work, after the kids have gone to bed, after my wife stopped yelling at me. I don't know. I don't have a wife, but I've had enough girlfriends that just yell at me. I can only imagine it gets worse when you're married. Or maybe my husband, if you're a woman, because trust me, I know that we're pretty awful too. But you know what I'm saying though, like, find an hour a day that you can consistently go through and track your own trading data. If you are having trouble with selling too soon or moving your stop to the wrong, like moving your stop too early, and go through and back test your own trades and say, where should I have moved my stop to and why? And then journal it and then write it down and then attach a picture of that chart and show where you did move the stop to, why you shouldn't have done that, where you should moved it to, and what that would have meant for you. I know that's a lot of work, and I know that it sounds really boring, and guess what? It is really boring, and it is a lot of work. But it's what's going to separate you from where you're at now if you want to get to a higher level. And guys, if I'm being honest, the main reason I haven't exponentially progressed, obviously, is in part to the market not being extremely hot. But I haven't put in that work in a while. I've been relatively comfortable where I'm at in a trading sense. There's always room to expand, but I'm working on things outside of trading right now that I'm happy with. And so I'm trading, less, but I'm also not putting in as much work. And that's why I'm not like all of a sudden now I'm not seeing these $10, $20, $30,000 days. Because guess what? I'm content with, I'm happy with the results I'm getting from my trading right now, being able to basically average $1,000 to $2,000 a day. I'm happy for that. Now, if you're not at a spot where you're like, I'm not happy, I'm not consistent, yada, 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 you got to fix it. And in order to fix it, you got to put in that time. So that's what I'm going to say there. I did not trade NUVG. I was looking at it earlier today, but again, I had internet issues most of the day, so I wasn't trading. Unfortunately. Yep. All right, I'm going to grab a water and then we'll get into volume. I'll let if you have any more questions, you have to get back with my water to ask them. So you've got approximately 1 minute. I'll give you guys until 3:15 or 4:15 Eastern. Be right back. I don't see any more questions. What's going on? Oh, I guess it's not 3:15 yet, or 4:15, depending on where you're at. Oh, now it is. All right, fine. We'll get right into the volume then. Okay, so guys, today's video topic is, like I said, volume. Woo, nice job, Gringo. Hell yeah. Oh, now, what, guys, I said it's till 3:15. Y'all had a minute to type this, and now I'm getting all the questions. My thoughts on the opinion, or my opinion on the action on PGY, basically the same thing as USEA. It's the same exact thing. But again, the sympathies never work as well. Now it's just dumping off because whoever promoted this move's like, I'm out. Nothing, I don't know, looks like a good chart, I didn't trade it, but it looks like a good chart. I traded EVTL yesterday, first half great, 505 to 540, then price action was extremely volatile on Wiki, so I panicked out and sold at 520. Yeah, so EVTL, that's one of those stocks you just have to know how it moves. And that's EVTL is like that. It's very wiki. And we've seen that from the past few days of price action, right? Very wiki. So you need to understand that and take profits quickly on those kinds of charts. But when I have really good trades, but nail good exits and entries, make me start to get nervous, like I'm going to mess up, maybe get worried about getting too confident. Confident is a very underrated aspect of trading that you really need to have. Confidence in your trading will carry you for a couple of weeks. When you're making good trades, you're really in tune with the market. I get it though. All right. Are you guys on are you guys ready to get into the topic? We'll probably do about 10 or 15 minutes of volume related discussion. Just to, again, show, I guess you can kind of call it like volumetrics, but really explain. So on something like RYTM today, right? Much less volume than it was running on here, yet more explosive price action here on lower volume despite it being a higher float. It's like, well, why is it doing that? How is it doing that? And because the volume is quite a bit lower and the float isn't rotating as much as it was here. So what's the deal? That's what I want to... No. Okay. Oh, volume sounds good. Okay. I thought you meant like volume. I was like, no, I mean like trading volume, not volume. Yeah, that is essentially the question that I want to go over, or not the question, my thoughts on trading related volume and how we can use it to better prepare ourselves to set better expectations for ourselves, stuff like that. So let me go over a couple examples, because the volume is a very important part of, I use this chart a lot, but it's one of the third day surge machines from back in the day. And I want to show why volume becomes so important. So NEGG has been an infamously low float stock. It's been around 4 million float for the entirety of its run, even during all of this. So basically, you have something like NEGG, right? And price action was crazy, right? I mean, went from $10 to $80, more or less. That's basically what happened there. After stabilizing it, this was a very, very strategically thought out move. Someone was accumulating a lot of shares in here, probably both sides, right? But they were accumulating something, or they were just holding it at this level for whatever reason, and then began the accumulation as we got closer to here. But either way, this was a very well thought out trade by a big guy or lady. So anyways, the reason volume becomes so important is because when price action is holding above key levels, which I would say 10 was a very important consolidation level for a long time, despite volume being low, because we got this big perk on a lot of volume, and it held for literally a month above here on almost no volume. And so what you then end up getting is this basically really tight consolidation. Like, almost imagine this like that same consolidation pattern we look for. I know you can't really see it. It's literally too tight. But you have that perk and consolidation. So that volume, this first perk has a lot of volume. You break out and the same thing happens again on a much shorter time frame, of course, now. But now you're getting this holding action right here on lower volume than the day of the run, but it's holding up. So in theory, less volume is actually needed for continuation, right? Less volume is needed for more continuation, because at this point, this day, shorts are not able to cover. This day, shorts likely have not been able to cover because the volume is significantly lower. And so what you then end up getting is what you call that blow off top day. If that volume can come in, you can never guarantee that volume is going to come in. That's the one big upside you have as a short, is at some point you've reached maximum demand. At some point you've reached exhaustion. So on a black swan blow off top type of trade like NEGG, where you're up 800% on crazy volume in the course of 5 trading days, at some point you're getting that really mean first red day. And what you then can do, the maximum demand has essentially come in. Is it possible for this to, this day right here, go from break down under 40 and then rip to 100? Anything is possible, right? Anything is, but the odds are so unlikely, so drastically unlikely that you are in the clear, more or less. You're going to have a very high win percentage as a shorting these backside breakdowns. So you have a failed third day surge attempt, which we're going to get into here. A failed third day surge attempt, and then the multi-day breakdown the day after. You could have shorted at 43, risking 80, 79. So you're risking $30 a share, but I mean, if you swing that, heck, you only have to swing it for a few days. You're risking roughly 100%, right? You could even go as far as to risk 59. the way I would do it is if I'm going to short this, I'm going to maybe wait until this day where then I can now say, okay, comfortably my risk is 59. I can add into a pop, which you would have. And then you can cover on that first green day attempt right here, which it did do. So, you're shorting that 40 and you add, you're risking $10. You end up getting a really easy 1-to-1 after you adjust your risk. Or you keep holding. I mean, you could have ended up getting down to like $20, $15, $20. Anyways, the reason I was talking about that is because like I said, you cannot guarantee demand to come in as a long. You're using indicators to help determine why demand should come in, why volume should come in, but it doesn't have to. As a short seller, you kind of have the opposite where if you're shorting front side, you don't know how much demand can keep coming in, but at some point demand has to exhaust. And that's when you get a blow off top, which is what we had here, where you were already getting these really nice runs on low volume. Well, good volume, but then you get the blow off top day. Anyways, volume here is still pretty high. I mean, this day it rotated its float 3 times, 12 million shares, ran from 11 to 20, is up 100%, consolidates, still trading, 3 million shares this day, 4 million shares this day, breaking out, finally having this breakout. You actually did have a third day surge attempt here, you just didn't get enough volume. And so then when you got this rip this day, it's official. Anyone who is shorted these 3 days is underwater. There's no way around it. So you have that gap up. And at this point, you would have seen a lot of volume already having come in. Then in that case, it's just saying, okay, where's my entry spot? What's my entry plan? What's the pattern I'm trading? Like, what's the intraday pattern I'm trading? What's my risk level? It is very extended, but knowing that at this point in the day, right, by the time the market had opened, I would be willing I'd be willing to venture a guess that it already traded, I'd say by 10 o'clock a.m. Eastern time, it had already traded about 10 million shares, meaning that it is already traded by within 30 minutes of the market officially opening. It's already traded the same amount of shares it's traded on almost every day of the run before that. Not combined, but you know what I'm saying. And what that means is that, okay, we can assume that today is going to have more volume than the previous days, knowing that it's extended so far off of lows, meaning that shorts are trapped from every other day. It's a low float stock. It's already done within the first 30 to 60 minutes, whatever you want to say. We can actually go through and look. But within that first 30 to 60 minutes, it's already done the same amount of volume it's done the past few days. On a day where it ran 100%, it likely is going to blow off today. The top is going to blow off. Shorts are going to be forced to margin cover, yada, yada, yada. That is how I look at volume. That's how my brain looks at volume on a daily and an intraday time frame. Now, I had a $20,000 trade on this third day surge attempt, which failed nonetheless, but it just didn't get enough volume, right? But it still had it was a very mid-range volume. It was getting good volume. The volume ultimately ended up dying off once it failed, and that's fine. But you know what I mean? Like this, this day right here ended up just not getting enough demand. It could have. And it was a mid-range spot. I was trading the daily chart pattern, the third day surge, but that was the extent of it. Really, it just didn't get enough volume to follow through. Now let's go over to an intraday, a multi-day chart like RYTM, and now let's break this one down. Let's here. I'm gonna start this on a daily actually because we'll look at some relative similarities. So these slower multi-day runners have been great because they've actually been setting up with really nice third-day surges lately, which this one has had too, RYTM. So you had this second day right here. You had this rest day near highs. Beautiful, right? And then same thing. Note the volume. Very similar scenario to NEGG, actually. You had this perk in here with abnormal volume relative to every other day, really, for the past few months. You had this perk and then holding up, very similar to NEGG, which we just went over. And then you get the breakout day on volume. You get continuation. Beautiful. Okay, now you have your rest day. This is where shorts are either 1, going to add, 2, going to just sit around and not have enough volume to cover, or 3, they're just going to wait to see what happens the next day. And sure enough, you get the third day surge. So on this day, it trades 3 million volume. The day after, it nearly triples it. 2.5 times is it, with 7.8 million shares. And so volume is very relative, because now at this point, yeah, it's only ever rotated its float once, but clearly something like RYTM, we've run from 4 up to 9, a little bit slower of a mover, you know, relatively speaking, to some low float up 400% kind of move. But 100% in 2 days is still great. 150% really, 2 days is still great. And we know at this point that even though the float is 34 million, it has been running 100% on, you know, it ran, let's see, roughly 60% on only 7.2 million shares. And then it ran another 50% on 30 million shares. We know it can move without a ton of volume coming in. It doesn't need to rotate its float 30 million times over, 34 million times over. Instead, we know that, okay, this rest day has still done a pretty good amount of volume, and it's just holding at highs, but it's still much lower volume than this day and this day, right? But it's relatively, it's still done a lot more volume than it was doing in this period in here when it had no attention. So clearly it was getting attention to it. The next day, the following day, you get the breakout, more volume than the previous day traded. Of course, less than here, but you're still over this day's price level, meaning that any short from in here is underwater and any long in here is still in the money. And we know that, unfortunately, most traders have one of two problems. They don't like to sell when a stock is going against them, or when they've been in the money the entire time, they struggle to think that it can stop. And they just hold and hope, and they're like, okay, this thing's going to 10, and then it gets to 10. They're like, okay, well, now it's going to 15, then it gets to 15. They're like, okay, well, now it's going to 20. Why would I sell? Why would I sell? I mean, I don't know if you guys heard the story about one of the Dogecoin millionaires. The guy literally, when Dogecoin was at like 10 or 11 cents, took out a second mortgage on his house, rode Dogecoin all the way up to highs, and is still holding to this day because he believes the hype. You know, you believe the story. And that is one, but that's good when it comes to multi-day runners, because it gives us smarter longs edge, where the only ones that are creating price action are new longs like us buying, or shorts being forced to cover. I shouldn't say the only, but it's not, no long is underwater on this from the past month. No long is underwater. And so that's how I use volume. It takes I know I just kind of went over a lot of different things there, but I take all those into consideration when I'm looking at volume. That's why multi-day structure is so important, especially as it relates to volume and how we can look at it, right? That's how I like to look at it anyway. So I want to know in chat if you guys have any questions. If not, I am going to head out here. I'm going to go play some basketball tonight. When you're in a runner and are up, how do you decide when to exit in terms of what you see in candles? Use 5-minute or 1-minute candles, wait for a red. I just sell into strength. That's it. I sell into strength. I sell into areas of resistance. I make sure that the risk reward is worth it if it's a bigger trade. If not, sometimes I just scalp it. It depends. That's a very situational question. That question, because it depends on what setup I'm trading. It depends on I'm reacting constantly. There's no, unfortunately, one answer for that. I'm a very reactionary trader, and when I'm reacting to price action, sure, I'll have a plan going in, but that plan can change based on price action. AEHR, no. I mean, I'm not really going to break it down, no, because it's basically a mid-cap stock. It's really not a penny stock, so I'm not going to break that down. But I'll show you. I'm assuming if you mean today, because I know it was up like 30% today. Yeah, no, this isn't, I mean, this isn't my style of trade, so I've got no, this was once a really great penny stock that had a great run that turned into a real company, but that's the extent of it. That's basically it, you know. Could it keep running? Sure. Could it fall down and never come back? Sure. I've got no idea. But I mean, at this point, it's, to me, is most likely a more fundamental based stock than it is technical. I think it's not going to get enough volume unless they come out with some insane news to go supernova again in a short time frame. So that's about all I can say on that one. Yeah, no problem. I just don't want to give insight onto something that I have no idea about, you know. You have a goal before you enter each trade? Yeah, for the most part. But my goal is going to be very much so, again, based on areas of resistance, whether that's like daily chart resistance, whether that's intraday resistance, because then it's going to depend on where I'm entering and, again, what I'm trading. But I do have a goal in mind, but I don't force myself to stick to that goal. It's just a goal. Risk-reward wise, no, I just have a price level in mind that I see resistance at. If I don't think the risk reward is worth it, I don't take the trade. But there are a lot of times I'll take a 1-to-1 risk reward trade. It depends. It's, again, very situational based on setup there. That's how I'd answer that. If I'm going into it knowing it's going to be a scalp, yeah, I might be going for 1-to-1. If I'm going in for a bigger picture, might be that 3 or 4-to-1. I might build into the trade. I might size myself into the trade, consistently moving up risk level to basically get a better risk reward. There are just a lot of different options. Yeah, of course. How you been, gringo? How have you been? I'm like really tired right now for some reason. Oh. I didn't sleep that great last night. That could have something to do with it. When do you realize that the target has to change? What are some indicators that change your mind? Failed breakouts, failed high day breaks, a dump out of absolutely nowhere, a pull larger than expected, a large ask showing on the level 2 that's trying to hold it down, a bid prop getting taken out. Those are a couple examples. Nope, I didn't trade today. Yeah, living the dream, baby. Let's go. Let's go, gringo. I love it. All right, guys, I think I'm going to hop off here. So I hope that, I think that's all I wanted to go over volume-wise today. There's a lot of different ways we can look at volume, but that is my way of showing that volume is a relative term, because there are situations where we can use that volume, like I said, where maybe it's not your traditional float rotator, whatever. It's not rotating as much float. Volume is relative. And at some point you will demand won't be able to keep up unless you're a blue chip stock where people are just constantly pouring money into your company. But for the type of stocks that we generally trade, volume is relative in the sense that different levels of volume will impact stocks differently at different points in their development, in their charts development. Like we saw with Rhythm, it needed more volume in the beginning than it does now because it's holding higher. Same thing with NEGG, but when you get more volume after it's been holding higher, you have a lot more potential for crazy follow through for those black swan trades. So if this was helpful, let me know and we can go more in depth on this next week. Or if you guys want a different topic, we can do a different topic next week as well. But I think this is an extremely important thing. And rewatch this, guys, because this all applies to intraday action too. This is all the same. One last example I'll show you here on RYTM is you'll notice the same thing. At the end of the day today, look at when that volume picked up, even though it wasn't hundreds of thousands of shares traded a minute, it's significantly more than we had during this consolidation period in the afternoon. And then you had that price action that lined up with a consolidation break. And what do you know? You had volume that lined up with a consolidation break too, and the two lined up beautifully. So this can all be applied on multiple different time frames and whatnot. So hopefully this was helpful, guys. I am gonna get going, so let me know next week what you guys want webinar wise, like what you want topic wise, and we can go over that. Okay, all right, y'all, I'm heading out of here. Thank you so much for watching, and I'll see you guys. We hope you guys enjoyed that last video. Thanks so much for watching and being a part of the StocksTrade community. We wouldn't be here without you guys. Be sure to hit that like button and subscribe to the channel if you haven't already. Our goal is to hit 100,000 subscribers by the end of the year, but we can't do it without your help. So if you enjoy what we're putting out and want to hear more, be sure to hit that subscribe button. I'll see you guys in the next video.